Hello guys, this is Satish from Invest, Learn and Win YouTube channel, and I've been into investments in the Indian market for the last 10 years, and I thought I'll start this YouTube channel to share my learnings with my fellow friends, uh, this being a very attractive time for all of us to begin our investment journey. And today, not such a great news for the Indian investors. Franklin India has uh, freeze six of its debt fund investments. So I thought I'll talk about this particular fiasco. So if you see here, these are the six debt funds of Franklin Templeton that the company has frozen. It has a total aim of 26,000 crores. And when I say frozen, what it means is there are no new investments into this fund. But the worst part is there is no redemption from these funds, which means you cannot take back your own invested good money. Now let's take a deeper look into these six schemes. If you see here, these six schemes have been under trouble for quite some time. As you can see from the number of segregated portfolios, they have been into kind of trouble for quite some time. We are all aware of the Vodafone Idea issue, and uh, that's how it is. Let's quickly see why it happened, right? Because debt funds are deemed to be safe, but why did it happen? As you would know, as you would see from this particular table, friends, at least 60% of the investment or the exposure of these funds, right, have been into low credit companies. When I say low credit companies, it's A plus and below. And if you see the high credit instruments, right, like AAA and AA plus, it is just about close to 15% is the allocation. So almost 75 to 80% of the allocation of these six funds has been into low credit rating companies. And this is why, friends, these funds were able to give higher yields. See, higher the risk, higher the yield, right? Higher the return, right? That is the basic thumb rule of investment, right? So that's why these particular schemes were able to give more returns because of the risk that they took. Risk meaning they invested in low credit rating companies. And the truth is, friends, none of these companies defaulted, nor AEM Franklin Templeton defaulted. It is just the mindset of the investors like you and me. Investors got panicked that it's COVID times and the lockdown is continuing, and you never know. The cases in India are still growing exponentially, and you never know when it is going to stop. So, what if these small companies go bankrupt? Then I wouldn't have my good old earned money. So, in a panic mode, they started redeeming it. As you can see in this table, almost 50 to 60% of the redemption has happened in the last 6 months. And these funds have been almost in the market for 10 years. And the redemption is falling by 50% in 6 months. It's quite a, you know, it's quite a challenge, right? So let's try to understand why Franklin Templeton did this, right? Because it's a renowned fund house, right? Let's see why Franklin Templeton did it. Because of the high redemption pressure, the company was under low liquidity. When I say low liquidity, what does it mean? Say, in case we have some thousand lakhs and crores of money in the Indian market, it doesn't mean that all of us can withdraw the money at at one shot, right? There are different stages of where the money is. Some is an investment, some it has to come back, some of it is in different forms, etc., etc. So similarly, though the EM was good and was huge, etc., the company didn't expect redemption of everything in one go or within a short span, which eventually had happened. So they have in fact done it to protect the investors. If they had not done it, they had to satisfy the investment authorities' obligations, and They would have done, went to a distress selling in the secondary market, obviously leading to a distress valuations, and it could have resulted in a significant NAV reduction and literally a bloodbath in the funds. So basically, to protect the investors, this is the best that the AMC could have done. And for the investors, who are listening to this uh, video of mine, if you're an existing investor, you really don't have an option because the funds are frozen. The only option is to be positive and to think positive because, as I told in the earlier slide, your funds are not lost. It's not bankrupt. It's with Franklin. It's on behalf of Franklin with the companies. Correction, guys. It's on behalf of Franklin who has done it on behalf of you in these companies. So the recovery will happen. Franklin has told they will. I was part of the investor call also. Franklin has told that until the portfolio maturity happens, right? If it's ultra short term, 3 to 6 months. If it is long term, it could take about 1 year. As and when it matures, or as and when the market improves, when they're able to get better deals in the secondary market, they'll sell these bonds and give back the money. So it's not a bankruptcy situation, guys. It's not like a finance company who has taken the money and ran off. So don't panic. Stay calm. And for other debt fund investors who have not invested in any of these six schemes, the repercussions will definitely be there in the short term. I could already see some of the funds down by 0.5% today. But what I would honestly suggest is talk to your investor today and get their guidance on what kind of underlying securities your mutual fund, your debt mutual fund has invested in. And the rule of thumb is 80% of investments should be in AA plus papers, if not AAA. And one thing, guys, let's not take any risk in investing in debt instruments. Right? Instruments are fixed income instruments, and they should be safe. Take all your risk in equity because equity in the long term, 5 years plus, will definitely pay you off. The graph is always upwards. Don't take any risk for 1 2% in debt funds. So that's it from me, friends. So if you like this video, do like to it and subscribe to my channel. You will have more interesting insights and videos coming up shortly. And in case you have any queries on your funds, please, on your debt funds, please put the debt funds name in the comment below, and I shall come back to you as soon as possible on my view if the fund is a good fund or not, or if you have to talk to your investors. Fine, friends. Then thank you so much, and meet you all guys in another interesting topic. So thank you.